Okay, last week was very interesting to say the least. The yes, today is this is for what's going to happen next week, but just to wrap up last week first, and then we're going to talk about the coming week. We have the Federal Reserve Open Market Committee on December 14. So the next couple of weeks should be pretty much quiet. We have a couple of numbers coming out Monday during this week, which is the consumer sentiment and the trade deficit. But the U.S. economy is beginning to do very well, and it's growing. We reached quite close to full employment. I mean, the unemployment now is below 4.6, which is amazing. Now they are tinkering or debating the hourly rates and the productivity and stuff like that, which are slightly lower, but when you do have a 4.6 unemployment, I mean, this is pretty much, it's stronger than full employment. In addition, the most of the economic or the economy is indicating that has strengthened, and the strength of the U.S. economy has now been more fundamental. That means that there is an increase in inventory, and it is a manufacturing-led growth. So this means that the soft patch in the economy has been overcome. Business investments have bottomed, it seems, and the corporate profits have began to grow. So with that, there seems to be little doubt if the Federal Reserve is going to raise interest rate on December 14th, which seems to be very reasonable, and I doubt if the FOMC have really much excuse not to raise interest rate. The one thing that I can say why they might not is because the kind of political idea that they don't want to raise interest rate before the president-elect takes office. That's one side of the coin. The other side of the coin, I mean, if they don't raise based on that political, they will say that the Federal Reserve is politically run. So most probably they're going to err on the side of, let's say, preserving themselves, and I think most probably they're going to raise interest rate just to get this thing done. The other thing that happened last week is crude oil. OPEC has reached an agreement to cut production, and as a result of that, you can see that crude oil began to reverse up, and with that reversal, that would lead to strength in the dollar, the Mexican peso, and as you can see, and in the dollar NOK. I mean, the NOK is going to get stronger. As you can see, the dollar is weakening because Norway, again, is an oil-producing country. So that oil, I mean, looking at the chart of oil, it's just closed above the structure point. So this means it has another, I would say, maybe $2. It might reach 51 or 52. So I think we need to put this. As you can see, this is the January contract, which is actually more indicative. The December, I presume, has expired. So at least it should get up to the 52.74, and it might break above that. And of course, if it does that, this means the Canadian will go up. This means the Mexican is going to go up. This means the Norwegian is going to go up. So these are the three crude or oil producing currencies. And if you look here at the dollar NOK, as you can see, the dollar has weakened pretty much against the NOK. And if you look at the dollar CAD, it also began to weaken, and it's sitting at a structure point, which is the 132.78. So a trade below that will lead to further decline. The Mexican is not as strong as the I mean, when this is going up, this means the dollar is going up. So when I say the Mexican gets stronger, this means that this would be coming down. The problem with the MEX is more psychological, because the people think that Donald Trump is going to take position or take the office on January 20th, and then he's going to start running by decree or by executive orders, which is I don't think that is going to be the case. I mean, he's not going to build the wall, all this mumble jumble that he said during the election. This is still a constitutional country, and even though the Democrats do not have a majority, but there is the checks and balances that is going to be enforced. So it remains to be seen, and that's why the MEX is not as strong as the Canadian and not as strong as the Norwegian. Also today, because this is the events of today, is going to have a direct impact on the currencies next week. So to start with, we have two elections today. One is the Italian referendum, and in the Italian referendum, Renzi was requiring some constitutional amendments, one of which is that to do a structural change in the parliament so that it will allow less gridlock in the way he's running the country or the way decisions are made. Also, this is not particularly going to stop him if he loses. It's not going to stop him because he was running the country already by decree. So that's not the question. Is will he has threatened to resign if he loses the election. So if he does lose the election, probably again it's up to him if he will actually go through and resign. But assuming that he would resign, then one of the ministers from his party would just move 2 chairs to the left and run the Italian government as a technocrat. It's not going to have any direct impact such as the Brexit or the Trump had on the economies. So it might just give an indication that maybe in next year, if there is the open election, there is the fear that the right-wing Italians might come into power, and the right-wing Italians are not, they don't want the euro. They're talking of getting out of the euro. They're talking about something similar to the Brexit. So until that election, and if and when the Italian right wing takes power, we will find out what the story is. The other thing is the Austrian election, and this was in my opinion, the more dangerous one, because if the right wing, which is the nationalist party, won the election, this would have been really very bad for the Eurozone as a whole. And luckily enough, the election results has came out, and the far right has been defeated. So if we were looking at 2 items that will affect the euro, one of them, which is the more, in my opinion, the more dangerous one, has already passed. We just have to wait and see what is going to happen in the Italian. With regards to next week, we really don't have much news to go through. We have the Royal Bank of Australia on Tuesday. Again, there is no expectation that they will cut any interest rate. They are going to be looking at what the Fed is going to do. So they will. I don't think there will be anything will be done there. Maybe people will be looking at the statement to see how bearish or how dovish they are. Then we have the global dairy prices on Tuesday night, which does have an effect on the New Zealand dollar. And if we look at the chart for the dairy products, you can see that it is kind of weakening. It's very volatile and it is weakening. So if this declines, we are going to get some weakness in the New Zealand. if we get the 4.5 or higher increase in the monthly prices, then the New Zealand will get stronger. Then we have now the Bank of Canada also on Wednesday. Again, there is no expectation that they will cut the interest rate. Again, it's a non-event. And the Canadian now is supported by the increase in oil prices. This means that the government revenues are going to increase. The Canadian dollar is going to get stronger. Their balance of payment is going to get slightly better. So there is no reason to think that the Canadian is going to cut interest rate. Then we have, of course, the granddaddy of all the, which is the ECB, the conference, and it is a live meeting, and as you know that the bond buying program ends on March 2017. It is expected that they are going to extend it for 6 months. But now there is some signs that the Eurozone economies are beginning to pick up some steam, and there is some fear that maybe there is a talk that they might cut it down, or they might set a date to the end of the program. Again, these are all speculations. If you look at the chart for the euro, it has declined tremendously. And this is something that Draghi likes, or he wants. So it is working in his favor. He's not going to fight it. So I doubt if Draghi is going to come up and say anything to let's say cause the traders to cover their shorts. We might get some buying in the euro, but I don't see Draghi actually saying anything to strengthen the euro unnecessarily. But if the results of the Italian election becomes positive, and I hope common sense prevails. I mean, at least the Austrians have proven that they deal in common sense, and that's why they voted out the far right. So hopefully the Italians, but I truly doubt that. As you know, from World War II up till today, they had 64 governments from in the last, let's say, 60 years. So they had actually close to the lifespan of each government, or the government would stay in power less than a year. So again, you don't know what the Italian will do. With that said, with that backdrop, and taking into consideration that the Federal Reserve in the United States would probably raise the interest rate on December 14th, what we are, if you look at this chart in front of you, this is the chart of the US dollar, and as you can see, we pretty much reached the high of about 102, and then we started coming down below that structural point. If you look on the weekly chart, and that is the 101.62, and that is this, as you all know, this is a major turtle soup. And this close on a weekly base is quite weak. I mean, it failed below the structure and it touched the previous week low and it closed a little bit slightly higher. This is, in my opinion, quite negative, and we should be looking for further decline, maybe to test the 99.95. So we have 10 days until the Federal Reserve decide what they are going to do. This rally that we have seen in the dollar is pretty much anticipation to the Fed raising interest rate. So it could be already discounted. And the good thing by looking at this chart is that we have a technical structure point, which is the 101.62. So if it trades below the goes above the 101.62, this means that the uptrend is going to resume. As long as it is below the 101.62, we are going to play the dollar on the short side. And we have seen, again, we have three currencies that have reason or cause to strengthen, which is the Canadian, the Mexican, and the Norwegian. If we look at the, this is the Canadian dollar. This is the Canadian index, the CAD index. So if this is going up, this means that the dollar is coming down. It's not the dollar CAD. This is the CAD index. So as you can see, we came above a structure point and we're kind of pushing. So we should be getting a continuation to the upside. So the Canadian is getting stronger. If we look at the Swiss, you can see that the Swiss has weakened. It's going in tandem with the euro, and the play in the Swiss as the play in the euro is going to be after the Italian referendum comes out. I don't know when it's going to come out in the next few hours. If we look at the Australian, just looking at this, you can see that we had a structural point, which is the 73.90, and we have turned above it. We tried to break below it several times, and then we are beginning to reverse to the upside. That is also an indication that the dollar might weaken. So this is another case to support the weakness in the US dollar. If we look at the New Zealand, this is the weekly chart for the New Zealand, and as you can see, the last 3 weeks we have been pushing higher. We came above the 70.46 and we're coming close to the 71.53. So that would indicate, again, this is the daily chart. It looks strong. It's the same pattern that we have in the Aussie. So we're looking at the New Zealand to continue to strengthen. So we have the Aussie indicating dollar weakness, the New Zealand indicating the weakness in the dollar, the Canadian and the Norwegian and the Mexican. So all of those are indicating to us that the higher probability is that these currencies are going to continue higher. The next one we have to look at is the Japanese yen and then the British pound. The yen, this is the weekly chart. And the yen has been one of the weakest currencies in the last 4 weeks. It had lost about 8% of its value, and it does look, I mean, quite negative on this chart. The only thing I can say about the Japanese yen, that this move has been very extensive. I mean, you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, about close to 20 days in one direction. So the odds are that we may, with the weakness in the dollar, the projected weakness in the dollar, we may get a push higher in the yen. It's not going to be a trend change, but it might indicate a correction to the upside. And we are very close. As you see, it closed Friday at 87.99. The structure point is 88.25. So if it goes above the 88.25, that would indicate we're having a short covering rally, and we're going to take us pretty much to 90.42. So we anticipate a push higher in the Japanese yen in a form of a correction. And this correction, again, would be anticipated in the euro. If we get a positive response, because as you see, the positive technical stance is that we did not break below, I mean, we broke below the 106.8228, and then we had 1, 2, 3, 4, 5, 6 closes above it. So that would indicate that probably we're going to get a positive news out of the election, and we may get a little bit of a short covering if it's, yeah, I mean, let's say to the 108, nothing spectacular. And the same thing, the same setup in the Swiss. We are all, I mean, the Swiss, it's below the structure, so the structure is 99.28. We close at 90, let's say 99, so 20 pips. So above that, we should be going up. And as usual, we have always a buying plan, and we also have a sell plan. But we know where we're going to buy, and when we buy, where our stop is going to be. And specifically, if you notice in all the these indices, we are at or very close to a structure point. So this is the structure in the Swiss. This is the structure in the euro. We're right above the structure in the euro. This is the structure in the yen. We're right at the structure point, which is the 88. So all of those indicate the possibility that, let me show you again, the New Zealand, we're above towards the structure point. The same thing with the Aussie. Again, you see the structure point is 74.70. So that is an indication that there probably is going to be a weakness in the dollar, because the dollar is the major component in these currencies in the baskets, and it should be going higher. Last but not least is the British pound. And if you look at this chart, this is the weekly chart again, the trend is still definitely down. I mean, this is just a correction to the upside. The idea of the correction, again, we have the British Supreme Court. I think they heard the arguments last week or yesterday, Friday, or they are gonna, I'm not sure exactly when, but I think very recently the argument, the pleadings are going to be, is done in front of the British Supreme Court. And there will be no decision at least until the latter half of January. But the legal experts in the UK are saying that most probably the Supreme Court is going to uphold the decision of the lower court. And that decision says that pretty much the parliament should be consulted or should vote on the Brexit. With that, there are two outcomes. If they uphold the decision of the lower court, which is again the most probable, that would mean that it does not mean that the Brexit is going to be reversed by the parliament, or there would be another vote. I mean, again, I have, nobody knows. But the best situation would be that with the parliament intervention, the Brexit is not going to be as hard as triggering Article 50 by March 2017. It might extend the triggering the Article 50 maybe let's say around 6 months, and to allow the government to negotiate a much softer exit, and they will remain in the EU market, and there will be a price to pay, and I guess the UK is willing to pay that price. So this postponement, let's call it, has been rather supportive for the British pound. And as you can see on the daily chart, the pound has moved slightly higher. It came back above the major structure point, which is the 125.56, and it's kind of pushing higher. I would see this move because it looks this is a reasonably strong close for Friday. It went above the previous daily high, which is 26.99. It closed at 127, so this is a good close. That would indicate continuation to the upside. So I would see a continuation in the pound's strength to test the 128.27. And this also confirms the general outlook for the US dollar. I mean, we have seen that the dollar shows weakness against most of the currencies, against every single currency index that we have looked at. And that would indicate the possibility that this will also continue. So we have two structure points, which is the 128.77 and the 128.93. So to summarize what we're going to be doing this session, we are going to pretty much be shorting the US dollar. And we are going to be looking at buying the CAD, buying the NOK, the Norwegian kroner, buying the Mexican, and in this case we are going to be neutral with a positive bias on the British pound, on the Australian. On the Australian, I think, I mean, we have to know that all of these, everybody's freaking out. So we have to be make sure that our stops are in the market and we are keeping an eye on the positions. And of course the Japanese yen, we're going to be Japanese yen, and with regards to the euro and the Swiss, it's pretty much what the referendum is going to do. So right now we are going to be slightly negative on the Swiss and the euro. So I think the good plays that we have is maybe shorting the dollar yen, shorting the dollar CAD, shorting the dollar MEX and the dollar NOK. So these are high probability trades. We can also take the Aussie dollar short. We can take the New Zealand dollar long, and we can take the pound dollar again until it tests the 128, let's say 93. With regards to the euro and the Swiss, this is going to be, it's rather risky. I mean, I have did the numbers so that whichever way the referendum comes out, then we are going to whichever way the numbers go out, then we are going to get a trigger whether to buy or sell. Okay, so these are the, I mean, if for example, if you take, let's look at some of the charts. As you can, if you look at all these charts, look at the Aussie, New Zealand yen. I mean, this looks like a reversal pattern or a correction to the downside. If you look at the Aussie yen, it's identical pattern. If you look at the euro yen, it's identical. All these indicate that the yen should get stronger and we can get a correction to the downside. If you look at the Swiss yen, it's the same. the pound yen. That is the pound yen. This one is actually the strongest so far, but if the yen will go up with all the rest, then it should come down. If you look at the Aussie dollar, you see this is a major structure point, which is a 73. We came above it, so I'm looking for this to continue higher, which means dollar weakness. If you look at the New Zealand dollar, it's exactly the same pattern. So again, that would indicate dollar weakness. But if you look at the Aussie CAD, you can see the weakness in the Aussie versus the CAD, and this is the Canadian strength. So again, if the Canadian keeps on going up, then we will short it below the 98.81. If we look at the euro pairs, this is the euro Aussie, and it is interesting to say the least. It is definitely in a downward market. It's in a bear market, but there has been no real follow through to the downside. So any move above any of those structure points will lead to a short covering rally in the euro pairs. That's the euro Oz. The same pattern you can see in the euro New Zealand. This is again the most bearish. We can leave the euro New Zealand if you like, but look at the euro CAD. That is the structure point. I mean, so the euro is only strengthening maybe against the dollar and the yen. If you look at the euro pound, this has, again, we have seen this is the major sell-off in the euro, but we have broken twice below the 83.96, and we haven't followed through to the downside. So if we come back above the 83.96, this will be a buying opportunity, the beginning of a short covering rally. So that is pretty much it, and the general plan. The radar screen pretty much is done until the US dollar pairs. I mean, I finished it all. What's left? Again, maybe the Danish and the Swiss, but everything else is done. So I will email it to you now. You can start putting your orders, and just leave the dollar pairs until I'll send you the second half of the radar screen. Okay? So with that, I wish you a good trading week. And again, just be slightly careful. Make sure that your stops are in. You might give the stops a little bit of room because they're very close to the structure points. But there are major political events. Again, all of this, I mean, we will know the Italian today, but again, these will have a knee-jerk reactions to the market. But that's about it. As long as we're careful, we can use smaller size, whatever, but that's the plan. So I'm sending you the radar screen now, and that's about it. So I wish you very good luck this week, all the best, and I'll see you next week. Anybody has any questions or anything? Okay, all good. All right, guys, all the best. Take care. Bye.